Hi, I'm Tim Scott, and today I'm here to talk about the trends that I think may shape the commercial real estate landscape in Western Australia in 2025. And whilst these aren't predictions, they are extrapolations of the data and what I'm seeing on the ground and in statistics. The first trend is the moderation of construction costs. So many people have reported to me that we've already seen some stabilisation of construction costs so far this year, and that's backed up by the statistics from Cordell's Construction Cost Index. It's been hovering between 2 to 4% per annum over the last year, which is significantly lower than the 10% in the previous years. So while I expect this stabilisation to continue, there could even be downward pressure caused by three main factors. Number one is the completion of major infrastructure projects under the Metronet program, freeing up resources. This graph shows the estimated completion date of projects, with the red line being today. As you can see, the bulk of the projects are either finished or will finish in the next 6 to 12 months, releasing those workers back into the market. Second, government initiatives to expand the construction workforce, such as offering a $10,000 incentive for tradies to move here from the East Coast and New Zealand, will kick in from January 2025. And thirdly, a levelling out of iron ore prices, which has anecdotally seen less hiring in the mining industry. As the effects of American tariffs are also felt next year, that could also further moderate the employment of our tradies in the mining sector. So none of the above items will deplete the economy, and we aren't looking at a downturn, but they may mean that the pool of labour to build in Perth and the southwest increases. If this occurs, the moderation in construction costs will be crucial for the feasibility of new developments across the state, which leads on to my next point. The second trend is the uptick in new projects, particularly in the apartment space. If construction costs stabilise and even moderate, and apartment prices continue to rise as they have done, more projects may finally start to break ground. So the PCA, Property Council of Australia, and Urbis recently found that there were over 10,000 apartments that were approved but didn't start construction over the last 4 years, and this is all due to feasibility. You'll find that the projects that have been started are in premium locations such as the western suburbs and near water. And the reason for this is that while it costs a similar amount to build an apartment throughout all of Perth, the sales rates you can achieve are much higher in premium locations, making it feasible. It's not that developers only want to develop in premium locations, they're forced to by feasibility. But as we extrapolate out the data, the metrics start to change, and we may see a wave of developments kick off in non-premium areas as sales rates cross the threshold required to make it feasible, and may be helped along by moderated construction costs. Contrary to the residential land market, there are many DA-approved apartment sites in B and C grade locations that are not constrained by environmental factors or lack of infrastructure. They just don't stack up due to the cost of construction versus revenue potential. And so it will have the most impact in these B and C grade apartment spaces. The third trend I think we'll see is improved feasibility for commercial developments. So the outlook for commercial property development may also brighten, especially as interest rates start to decline at some point next year, hopefully. When the RBA do eventually lower those interest rates, that will improve the terminal value for developers, making it easier to justify new construction projects. So this, paired with stable construction costs, could unlock stalled projects and encourage new investment into commercial real estate. There are quite a few projects that don't stack up at the moment that may do over the next year: shopping centres, some childcares, medical and others. And the demand has been building for these product types over the last few years with our dramatic population growth, but the supply has been limited. The next problem will be finding the builders to build the projects, but we are now seeing some small to mid-tier building groups take the step up to the next level to fill a vacuum and represent the next generation of builders in the market. But organising the additional labour will still be a challenge. While challenges remain, the combination of stabilising costs, rising demand for apartments and potential interest rate reductions could set the stage for a more active and optimistic commercial real estate market in WA. For developers, investors and property owners, 2025 might just be the year where opportunities align. I think Andrew Forrest said it right the other day when he said, "Build, baby, build."